You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Well, when life hands you coronavirus, make Coronade. This is what the show is. It's your Corona Aid.
That is so wildly inappropriate, but you're going to go ahead and say it anyway. So
I'm going to say it anyway.
You.
Well, it's just you've got to have something to keep busy and to deal with, and you got to while you're staying healthy. Then maybe it's a good idea to take care of that second most important part of life: staying fiscally fit. Healthy and fiscal fitness. That's
I think
really
it is,
what.
Yeah, the order is correct there, by the way.
And that's what we're about. We're the fiscally fit part. Stay physically fit.
Okay.
And then we'll help you stay fiscally fit.
Okay. Yeah, that works. Yeah, sure. Why not?
You
How
okay
do you do
with that?
Yeah, I'm good with that.
I don't know.
Yeah,
we'll
I mean,
figure something out.
I think it is health
We got 2
first.
hours to figure out how to do it.
Maybe you can help by calling us and setting the record straight.
Okay. Yeah, there's a number that you need to call to be a part of what we do here. And we really like it when you call us because that's the best way we can help you. We know what you want. You just give us a call at 855-935-TALK, 855-935-8255. If you call on Saturdays between noon and 2 Pacific, 3 and 5 Eastern, you'll get us live. We can have conversations. Otherwise, just call and leave your question. We'll answer it on a future podcast. So it's so easy. It's really... Yes?
You forgot to add in the email part.
Oh, my gosh.
That's why I'm here to set you straight.
Yeah. If you'd like to email a question, there's actually 2 ways to do it. Go to talkingrealmoney.com and use the contact form.
Yes, you
or
could.
Or just send it to Don@vestory.com.
Okay.
DON@Vestory.
Because some people they don't want to be like on the radio. I get that. That's not, their thing. I don't want my voice going out there. I don't want to tell the world who I am. I just want my question answered. We're totally good with that.
We like being on the radio.
I know. Going back to the Stone Age, we've been here since they introduced electricity. Yeah. It's been good. And,
I have a question for the day. I do. This is my question. Actually, this is a question for pretty much every day in this industry. Why do we have so many liars? And I do mean absolute bald-faced liars in the financial services industry.
We're picking up where we left off last week then, I guess.
Kinda. It's a recurring theme.
Please, no one call and tell him, please take that guy out back and shoot him. No, let's not do that. Okay, what do you say?
Oh, it's so funny. I got notes from people in Bellingham going, it's not this firm, is it? I go, no.
I know those guys, right? No, not them. Yeah.
It's not this firm. Yeah. No, it's not that firm either. No. So far, no one's actually guessed the firm.
Good.
I can give you all in Bellingham a clue.
Let's not.
You want me to give them a clue?
Let's not.
Oh, okay. I have a really great clue. It has to do with running. That's all. Just all I'm going to give you.
Oh, man.
855. What?
Okay, go ahead.
935-TALK. That's all. That was the clue.
So I don't understand why you're so surprised that people in the money business, where they could make money by not always being honest, are not always honest. Why is that such a shocker to you? Why is that such a breakthrough thought?
Think about when I think about that's why I came up with the physical and the fiscal.
Yeah.
When I think about physicians, I generally think I'm going to trust them with my life, with my health. There has to be a high degree of trust between you and the medical profession. But the next thing down in the hierarchy of importance in our lives is the money. So shouldn't there be a very high degree of trust between the clients and the people who provide financial advice? But I got to tell you, I'd have a hard time trusting anybody these days because the lies are legion. They're everywhere. They just lie about everything. Oh, yeah, you can get... Now, let me just tell you the biggest lie of all time. This is the biggest lie of all time.
Wow.
This is it.
I'm writing it down.
This is the big lie.
Okay.
Ready? You can make lots of money with little or no risk. Anybody
that's been going on forever. Yeah, that's always out there. So is this something new then? Is this where we're going with this?
No, it's just that something new came up.
Well, there's all kinds of new things that came up.
And that our buddy Jason Zweig,
yeah.
I'm doing it with the German. Jason Zweig.
By the way, the Germans were back. Germans were back on television today, live sports.
Yeah. Of course, you have
the
to mention
Bundesliga.
soccer.
Well, this is for anybody who likes live sports.
But how do you manage to fit soccer into almost every financial show?
Because I'm just darn smart. That's how.
Okay. If that makes you feel better, I'm going to go with that.
Jason Zweig wrote a piece today.
Ladies and gentlemen, Tom is just darn smart.
You know, by the way, I hope you realize I was kidding.
Change the subject again to soccer.
I'll finish the soccer story.
Okay.
It's weird playing games, professional games, with no one there. I watched like 15 minutes, and even my wife's like, "What? That is just very strange." So,
I got to tell you, it would just be strange for you to be playing a professional game at all. So,
yeah, or anything
whether there's an audience or not.
Good.
I got to tell you about what Jason wrote about, but we do have to take a break before we do that. You have got to pay attention to this because this is the big lie.
Tom and Don are talking real money.
Hi, I'm Don McDonald from Como's Talking Real Money. In the wake of this global health crisis, many businesses are looking for ways to adjust to the economic changes it has caused. Some firms are considering early retirement packages or voluntary layoffs. If you're nearing retirement, these options may seem attractive, but what are the possible pitfalls? We at Vestry know how confusing these life-altering decisions can be. After all, Tom and I have been helping you manage your financial life for more than 30 years each. That's why we're offering a free virtual meeting with one of Vestry's 100% fiduciary advisors with no obligation and no sales pitch ever. If you need help, set up your appointment today at talkingrealmoney.com/meet. Let us help you better understand your options and create the plan you need for the best possible retirement, absolutely free and from the comfort and safety of your home via Zoom or phone. Set up your appointment now at talkingrealmoney.com/meet. That's talkingrealmoney.com/meet.
For your real life and real future, Tom and Don are talking real money.
Give us a call, 855-935-TALK, 855-935-8255, because there are a few things you deal with that are more important than money, your health being one of them, but this is the other one, and that's why I say it is so important. It is crucial that you find someone to help with money who isn't going to lie to you, and I believe fervently from my experience and years of it that the vast majority of the financial services industry lies with impunity. They think they're covered by their disclosure documents.
Did you always feel this way, by the way? Or is this relatively new? Last 10 years?
Within 2 years after I left the securities industry.
Okay, I was wondering how long ago. Okay. Which is, that was,
a long
the
time
earth
ago.
was still cooling at that point.
Yeah. Because the industry says, hey, we gave you disclosure documents. What I'm talking about today in the Wall Street Journal.
Did you read the
Jason Zweig.
prospectus? Yes, of course.
Yeah. But carefully before investing.
Mm-hmm.
Uh-huh. How many of you read the prospectus
Nobody.
carefully before investing?
Be honest.
So what... Zweig wrote a piece, and by the way, the Wall Street Journal did a piece on this back in, Gretchen Morgenson did one in 2019 about this same program.
I thought we talked about this before, yeah.
Yeah, it's a program that was sold by UBS, the fine financial advisors at UBS. Yes, if you were one of their bigger clients with like $5 million in assets,
you really got treated special. Yeah.
Oh, they had a special program just for you. All you had to do was say yes to the yield enhancement strategy.
I love that name, yield enhancement.
It's a great name.
Self-demobilization. Yeah, go ahead.
What they would do is they would take a loan against your portfolio at UBS. They would take that money. Now, you're the client. You're borrowing the money. They would take that and they would invest it. Well, I hate to use the word invest.
They would speculate.
Place it in an option strategy known as the Iron Eagle. Well, the Iron Eagle is an option strategy. It's like a straddle. You straddle either side of the market. And what it does is when the market doesn't move a lot, these options expire worthless. and you get to keep the money. So you get a little yield. And they were quoting a yield of about an extra 4% or so.
That's a lot of money.
From this strategy. And they said, you see the lips moving don't count. When you hear words coming out of an advisor's mouth, anything they say doesn't count. Because the clients claim that the brokers told them that there is little or no chance you could lose. As a matter of fact, one woman in Connecticut said that her broker told her, where is it? This is a great line, that that everybody else in the country would lose money before she would. I
didn't see that line. Wow.
Well, that's in another story. Here
okay.
It is. He said this is the broker Robert Perlman who sold her this strategy. Said it had a 17-year history with no losses. This is back in 1997.
Isn't that what Bernie Madoff had until he lost money?
Yeah. And he said, quote, if the world came to an end tomorrow, you'd be the only one with any money left.
Which is very important, as you know, because if the world's ended, you're going to want to have your money.
This woman lost $750,000.
But she had a lot.
She did. She was worth $3 million.
Oh, well, okay. But how come she's in the program if she's not worth it for people $5 million
well,
and over?
Who knows? She put
they
$3 million in.
They lowered the minimum to get you in. We snuck you in there.
But
not
they
that I don't
say
feel
at
sorry
UBS, we disclosed it. We told them it was risky. Yeah, in the disclosure documents.
Yeah.
So here's the point. If their mouth is moving, they're probably lying. It's the paper that counts.
Give the number, and then I'll give the numbers.
Okay, the number to call is 855-935-TALK, 855-935-8255. Yeah, this investment supposed to make 4% per year, but and apparently had a 17-year history of never failing. Nice back testing, dudes. But in 2017, Tom, what did it?
Well, it made 2.7% 2017.
That's pretty close to 4. Okay.
2018, you may remember stocks were down for 2018. Yeah. S&P lost 4.4, but if you had the pleasure of saying yes, you lost 18%, not 4%.
Whoa, that doesn't sound safe.
No, it doesn't.
Wait. Were stocks safer than the yes program?
Well, safety is a funny word when it comes to all this. So 2019, the S&P 500,
Wait. This had to be a great year for the yes program. S&P 500 was up 31.
31, yes.
Yeah.
Should have said no because yes lost 2%. Oh, by the way, it's down another 15.5% so far in 2020 as of April 17th.
Yet they loved the story. You see, clients love the story. Oh, here's a way to make extra money on your money without doing anything else. You just let us do this, and you'll magically get extra money with little or no risk.
Well, no, I think remember what they said was you're going to deliver consistent income at minimal risk.
Little or no, minimal. That's what people hear.
Yeah.
When you hear minimal from your broker, you think little, not much.
So this was something for special people, right? That only special people could get into. They charged a ton.
Oh, I forgot that part.
Wow. Couldn't believe the charges for this size of an account.
Get this. Now, what do we tell you the worst fee you should ever pay a real fiduciary advisor is? The highest fee, about 1%, right?
Yeah.
That's what we say. 1.75% annually to run this program for you.
And there may have been more because your money was at UBS. They might have been charging you.
Oh, this was just for this program.
This is just for this program. Yeah.
Oh, yeah. Wait, if you were a regular UBS client,
sure,
then you were paying probably another 1+.
But it doesn't matter because you're getting additional money with minimal risk.
Wait, is that what you got? No, let's see.
That's not what you got, but that's what they're going to tell you.
-2, -15. Wow, that looks to me like almost a 50% loss in 3 years.
So I got to say, with UBS, this is correct branding then. UBS. I'm just going to say it. They got it right this time. Rarely this spot on. DoorDash,
and
UBS,
if you think, oh, well, it's just rich people who got robbed. Think again. The industry, the The financial services industry has a scam for every one of you out there.
Oh, they're lining
really
them up.
do.
Yeah.
They've got indexed annuities for the rest of you.
Or maybe when we come back from the break here in a minute, we could talk about an individual stock that they have.
That's great.
I can't believe.
Do you know what's ironic is that on the article online for the Wall Street Journal, there's an ad that has a woman out of focus looking at an apple and an orange. Now, can you guess what that would be an ad for?
No.
The Bond Fund of America.
It's apples and oranges. Okay,
it's
I got
apples
it.
and oranges. I don't get it. We'll be back.
Tom and Don are talking real money.
Do you know what your investment risk tolerance is? Take our free no obligation risk quiz at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Our telephone number here is 855-935-TALK, 855-935-8255. It's really easy to be a part of the show. It's really easy to ask questions, and we really
Unless you work at UBS.
No, we'll even answer questions
Well,
for
yeah,
you who
but I
work
doubt
at UBS.
they'll call. I mean,
If
go
the
ahead.
question
Sure.
if the question is, should I continue working for them? The answer would be not if you have a conscience.
But if you're the options trader running the Yes program, making all that money, absolutely stay at it. I mean,
Is
that's a
it
lot of money
still-
to be made.
I wonder
$6
if
billion
it's still
under
going.
in the program was the last number he had. Yeah, that's a good question. Can you still buy into this
I don't know, but
very
it's funny.
exclusive and exciting
I looked
program?
up the yield enhancement strategy on Google. You just type it into Google.
Yeah.
And let me do it because I'll just give you the first thing that comes
The
up.
yield enhancement strategy.
Enhancement.
Yeah.
Strategy. Oh, I got to spell strategy right, not startegy. There we go. That's better. First thing that comes up.
I don't want to know.
Yield-
Can we say it on the show?
Yeah.
Okay.
Yield enhancement strategy. We may recover investor losses. Great.
Wait a minute. That's the what?
Yeah.
That's the
Yeah.
news release or
It's-
something. We'll see if we can get your money back.
It's multiple ads and articles and things. Investorslawyer.com.
Oh, got it. Yeah, I did notice.
Zemansky Law Firm.
Yeah, I know they're quoted in the article. Yeah, of course.
Yield Enhancement
Yeah.
Strategy Recovery.com.
Yeah. Mm-hmm. Just when you thought you wouldn't get any of your money back, let me think. You wouldn't get any of your money back. So
Yeah.
it's all in the prospectus. You have to read the prospectus. Did you read it?
I didn't even know what an iron condor was till last year. when
Yeah,
I
well, it
heard
was a very famous battle in the Soviet Storm program that apparently you didn't pay attention to.
Oh yeah,
Iron.
now I remember.
Yeah.
I remember this because we were making fun of it and Vikings,
Yep.
the TV show.
Yep.
Yeah, now I remember.
Okay, but let's just assume for a
wait.
moment
Yeah.
you don't have the $5 million, but you
Yeah,
still
no.
want the hot tip. You still want to make more, right?
Of course I do.
Yeah.
Because I'm a person
And you're
and I'm greedy.
and there's a lot of opportunity right now with the recent crisis, right? Oh
no.
yeah.
No.
By the way, you
No.
know what's a value stock? We just asked Dimensional Funds the other day. Your friends
Yeah.
at Disney now large
Oh
value.
yeah. Oh man.
Boeing,
They own a lot of.
Boeing still growth. Haven't
Really?
fallen enough. Yeah, that's what they said.
Well, see, Disney is making no money, but they have a lot of valuable assets.
Well, that's true.
So that makes them
That's
a value
good
stock.
point. But instead, let's just say, for example, you found the company that is going to come up with the cure, the vaccine for COVID-19.
Oh,
You
yeah,
found
there
out-
there is one.
I read the quote yesterday. We want to emphasize there is a cure. There is a solution that works 100%. That
Yeah.
from Henry G., who's the CEO of a company called Sorrento Therapeutics, which yesterday morning opened at $2.62 a share and closed the day at $6.70 a share.
Gee.
So if you're feeling left out of the Yes program because you don't have $5 million, here's your chance. Trade your
Do you
way to
think-
Nirvana.
Do you think this guy may have been trying to pump up his stock price?
No.
How
I didn't
could
look how
you-
big the company was, actually. So.
I'm trying to find it, but it's
Sorrento
small.
Therapeutics, yeah.
Couple hundred employees is not huge.
Yeah, well,
it's not a big one. And
This
and
is
just
going
to claim-
places, man. 100%.
Yeah.
Cure. That's all you need to
This
know.
is ridiculous.
No? Okay.
the lies we are told.
As for full results, Sorrento said, full details will be submitted to a peer-reviewed publication shortly.
Which means they'll submit it in the next few months. Yeah. It'll get reviewed, and by maybe December, it'll turn out that they really didn't have a vaccine because we've only got about another 100 companies around the world.
Is that all it is? Got to be more than that.
I'm just guessing. Some who are much better funded, I'm sure, than Sorrento Therapeutics.
One might imagine.
But I would imagine that a couple people.
We don't own shares of Sorrento, nor do we recommend them. I don't think we would.
I'm sure we don't own it. No, I'm sure we don't
too
own
speculative.
it. None of our funds have it. It's too speculative. 855-935-TALK, 855-935-8255. Give us a call. We'll talk about your portfolio, your investments, your future, your retirement, your job, your money.
Tom and Don are talking real money.
If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary low-fee investment advisor, call my firm Vestory at 800-386-3004 or visit us at vestory.com.
Reality radio for a really great future. We're talking real money.
I was listening to the news. I actually was listening to the news.
Yeah.
And I heard the chant, and the chant, what do we want? A different chant. When do we want it? Now.
Yeah, that's been the same refrain since I think the mid-'60s.
Dude, somebody get creative. Create a new chant. All right? Thank you. I'd be happy if you did.
Not a new mutual fund, though, okay, or a new ETF.
No.
Got enough of those.
855-935-TALK. That is our little phone number, 855-935-8255. During the break, I did a little checking. Remember earlier in the hour, I mentioned the weird ad for American Funds, Bond Fund of America, that had the apple and the orange and the blurred out woman. Like, are they saying their fund is an orange or an apple?
Yeah.
I wasn't sure which.
You can't compare apples and oranges. Sure.
Is I pulled out either two apples or two oranges to compare to each other. I figured that was a comparison thing. And the funds I chose to compare, this is the fund comparison corner on Talking Real Money.
And this is, we're talking about mutual funds here, which a mutual fund is a security that holds is a basket of a lot of other securities.
Thank you, Dr. Money.
I'm trying to make this thing simple for you.
That was good. Yeah. No, I like that. I decided to do a comparison. Here is a telling comparison of the difference between a broker sold fund and a no-load index fund. Ready?
Yes.
Two funds, American Funds, Bond Fund of America, Vanguard Total Bond Market Index, Admiral shares. These funds have almost identical SEC yields right now of 1.5%.
But if you put it almost in the identical. Yes program, you're going to make the 4, so why would I do that?
4 more, absolutely. The expense rate, the American funds sold through brokers with a commission that in the brokerage industry, is actually reasonable at a mere 3.75%.
3.75%, really?
3.75, not 5.75.
This for something that's yielding like 1. Sure.
1.51.
Good Lord. But okay, go ahead.
The expense ratio of the American Funds Bond Fund of America. This is a little comparison for you. Contrast and compare. 0.61% annually.
0.61. Got it.
1.5% yield. Vanguard's expense ratio, 0.05%.
So 5 basis points.
5 basis points, which makes the American Funds Bond Fund 12 times more expensive.
Good job on the math. Well done.
Yeah, thank you. The average annual returns, very similar. Actually, at 15 years, Vanguard beats them by almost a point, but those are pretty similar.
A year or a point over the time?
A year. A year.
I mean, 1% a year is...
over 15 years. Well, it's a little less than 1.
Sneeze at or cough at,
but it's still good.
Okay.
But here's the deal. And that is not COVID, by the way. It's
allergies. You got tested or something, didn't you?
I did on Friday. I haven't gotten the results yet.
You're still looking okay,
Tested to see if I have the antibodies. So you're wondering, you're thinking, wait, they both have 1.5% yields.
Yeah.
But one is 12 times more expensive. How does that work? Are the American funds managers just really good at what they do? Or is there something else? Because the two funds have almost exactly the same duration, maturity of the funds. Almost exactly the same. Yeah,
mention something here is the Vanguard fund is an index fund. It simply holds the securities it's required to hold based on the index.
Correct. Right.
The American funds has a series, by the way, it's a series for American funds of managers who are moving things around and responding to market conditions and interest rates and economics and all that kind of thing. So there's a big difference here.
Speaking of that, the turnover is how you measure how much they trade.
Yeah, I mean,
and the turnover of it's 286%.
Yeah, so that means you start the year with a group of bonds and you end the year with 300% difference. So it's extensive.
3 times the portfolio turns over, basically. Whereas Vanguard's turnover is 31%.
And you're going to have some turnover all the time fairly high in a bond fund because you get new bonds. Right. Bonds are maturing.
Right. But Vanguard has 17,750 bonds in its portfolio.
Really? 17,000?
Yeah. 17,750 different issues.
Yeah.
American Funds has 2,400 issues.
Okay, which is still a substantial number.
But we're still looking at this going, what is the difference? How does American Funds remain competitive with Vanguard at so much more cost?
I'm thinking it has something to do with risk.
Credit quality.
I kind of thought so. Credit quality refers to the quality of the issue, the bond. You know, how do the people that look at these things think that you'll get paid back? Yes, maybe, or no.
Vanguard has almost 46% of its portfolio in U.S. government securities,
which have been pretty good track record of giving you your money back with the interest.
The degree of safety is high.
Yes.
In the American Funds, Bond Fund of America, it's 30%.
And
that's a huge difference. So the average credit weighting of the two funds is AA for Vanguard and single A for American funds, and that explains how they can have a comparable yield with much higher fees. They're taking more risk, and this is what we keep trying to get across. Risk and return are connected.
Tom and Don are talking real money.
These are extraordinary times, and you may be getting news you didn't want to hear. That is, your company wants you to retire sooner than you'd planned and take an early buyout. But how does that buyout fit into your retirement plan, and how do you pay for a lengthier retirement? Hi, this is Tom. Our company, Vestry, was created for times exactly like these. We exist to help our clients transition to retirement seamlessly and without worry. And during this health crisis, we do it all electronically with an unmatched level of service. Get a free virtual consultation now. Go to Vestory.com, Vestory.com, and click on Schedule an Appointment. Not only do we work to build your wealth, we manage your money to create a lifelong income stream without using expensive annuities. And let me make you a guarantee. The meeting is free, there is no obligation, and absolutely no high-pressure sales pitch. Visit Vestory.com, that's Vestory.com, click on Schedule an Appointment.
For your real life and real future, Tom and Don are talking real money.
There's not a lot that you deal with all the time that's more important than your money, and we want to help you deal with it better by giving you an opportunity to share your concerns.
Are you okay?
And get answers to your questions. Yeah.
All right, you're having a little something there.
8-5. I'm having something.
Couple 5-hour energies.
I've got this, my allergies are really acting up today. It's not COVID. 855-935-TALK is our phone number. Excuse me, 855-935-8255. And Rolf, you're up. Welcome to Talking Real Money.
Hi, Rolf.
Hi there. How are you?
Good.
I talked to you guys a few years ago, and I told you about an investment I had. I got the investment after I sold an apartment house. It turned out that investor walked off with my money and is out on bail now, but I'm going to get the revenge of testifying against him at a trial sometime in the near future.
So he's been charged criminally?
Yes, he's been charged criminally.
Wow.
He sort of did a Bernie Madoff. He did about $10 million, but I originally saw his ad. I didn't see an ad. I saw him where the Wall Street Journal was calling him for advice.
But you have to understand, Rolf, the Wall Street Journal calls hundreds or thousands of people a year for advice, and it doesn't mean they know what they're talking about. Now, what kind of an investment was this? What kind of an investment was it?
It was an annuity. And he put it in a trust, and then he started pulling the money out of the annuity. And that's what he did to about 10 or 15 people.
So he got between you and the insurance company that wrote the annuity? That's kind of odd.
Yes. Well, anyway.
Here's
right.
my question for you, Rolf.
Go ahead.
You called us about this, right? About this investment?
I called and discussed it. You know, I don't remember exactly what I said, but I do remember talking with you. But it's been a long time.
What was the appeal? And this is a lesson. This is to help others listening, Rolf, because we can't help you right now, and you're gonna, as you said, your revenge will be testifying. What was it about this investment? What was the pitch that made it seem so appealing?
Well, the annuity had I believe it was an indexed annuity that would go up with the market, and it paid, a minimum, there was some minimum level of interest that it would always pay. So, I was going to use it, as a means of getting money back from my investment. I just should have kept the investment and never placed it with him.
Yeah. Well, hindsight's always 20/20 though, Rolf. Yeah, okay. But it almost sounds like he was lying about it even being an annuity, because it is so hard to get an annuity that would turn out to be a Ponzi scheme past state regulators. Now, since he has been arrested, he is in jail, correct? Or he's out on bail?
No, he's out on bail, and I actually think he's a flight risk. Matter of fact, he was registered with the state of Washington in Olympia to sell these things.
Oh, I'm not doubting that. Here's the thing. Since he has been arrested, we now have it. He hasn't been convicted, so he's an accused criminal. But now his name is public information. So if you wanted to tell us his name, you could.
Sure.
I'd like to look him up.
Anything.
Pardon me?
Yes, his name is Anthony March, or Tony March. And
Anthony, M-A-R-C-H?
Yes, and he lives in North Carolina.
Oh, he lives in North Carolina. Did he sell you? Are you in North Carolina, or are you in the Washington area?
I'm in Anacortes.
Oh, okay. So he sold it to you from North Carolina?
Well, at that time, I lived in Virginia.
Oh, Anthony Wayne March of Wake Forest. Yes. He was selling charitable gift annuities.
Ah, that's how he did it then. That's how I was trying to figure out how he got the money.
Yeah, he's being charged in the Eastern District of North Carolina.
Just got charged last fall, it looks like.
Yeah. See, this is, I really appreciate you calling with this, Rolf, as painful as I know it is for you, because this kind of a call helps others out. It really does.
One last thing, and then I'll let you go.
Yes, sir.
He actually paid me money for several years. I bought this annuity. He got my money way back in 2005, and then the investment was annuitized. At least I thought it was annuitized. Mm-hmm. And he started paying me about $2,300 a month in the last part of 2012. And one day in 2016, he called up and said he was doing business as asset trader.
Asset trader. I'm looking at it. Yes, sir.
And then he said, the asset trader is declaring bankruptcy.
Mm-hmm.
And you know, the funny thing is, I got back last year about $24,000 was returned to me. The present value of the annuity at the time was $550,000.
And you've lost all of that?
I got back.
Well, I'm very sorry.
$24,000.
I am so sorry, and I wish you the best.
Luckily,
and I wish
still have a good pension and from the government. Who knows?
Well, and I wish him the maximum sentence of not more than 20 years on each count, and he's been charged on a number of counts. So good luck. Thank you so much for calling. I really, truly appreciate it. 855-935-TALK is our phone number. And Carl, you're next. Welcome to the show.
Hey guys, how are you?
Hey, Carl.
Good.
Don, what happened last summer? You never made it to Philadelphia.
The Airstream broke down.
The Airstream got about 30 miles, and then it's on the side of the
Airstream
road
broke
somewhere
down,
in Carolina.
and it ended up in a dealership for the summer getting fixed, and then they didn't fix it, so it's going to go back again this summer to a dealership.
Do you have another one you'd like to sell him? Is that why you're calling?
Hey.
Oh, sorry.
We only have a minute. We literally have 1 minute,
Go,
Carl.
Okay, I listened to you folks for a while, learned a great deal. I don't get the obsession with VT Wax. It's got everything against it. Two major strikes against it. First, it's in the it covers all sectors, including what's doing very poorly right now. Think entertainment, casinos, airlines, banks.
Yep.
It's got all asset classes, including the ones that are underperforming. Value.
Okay, good. You know what we're going to do? Tom and I are going to start the next hour of the show talking about just that question, because we hear that a lot. Why are you buying the ones that are going down? Why do you own the ones that are going down? Why don't you keep those out of the portfolio and just buy those that go up? Thanks for the call.
Tom and Don are talking real money.
Here's a little ending for just the daily podcast, because we do a show on Saturdays and it's 2 hours long. 1 hour we do in one podcast. The second hour we do the next day. So the continuation of the discussion about why we don't just suggest you buy the good stuff will be in tomorrow's podcast. That will be on Tuesday, the 19th of May, 2020. So check it out tomorrow. We'll talk to you soon.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.